Let's talk about China and the United States, two global powers whose relationship shapes the world's economic and political landscape. Their interactions, whether cooperative or confrontational, have far-reaching consequences for everyone. For years, these two economic giants have been locked in a trade war, a battle of tariffs and trade restrictions that has impacted businesses and consumers alike. This conflict has created uncertainty and volatility in the global market. But on June 27, 2025, something shifted in this dynamic. A potential turning point emerged, signaling a possible change in direction. China confirmed that they had reached a new trade framework agreement with the US, a development that could reshape their economic relationship. This agreement represents a significant step towards resolving the trade disputes that have plagued both nations. This is a big deal, a potentially game-changing event that could have ripple effects across the global economy. It represents a potential ceasefire after years of escalating tariffs and trade tension, offering a glimmer of hope for economic stability and growth. But there's a catch, a caveat that adds a layer of complexity to this seemingly positive development. China is also launching a comprehensive review of its export policies, a move that could have significant implications for global supply chains and trade flows. It's a classic diplomatic move, a strategic maneuver that reflects the complex interplay of economic and political interests. China is offering cooperation on one hand, while simultaneously keeping leverage and maintaining its strategic options. For now, the world's two largest economies, the driving forces behind global growth and innovation, are choosing dialogue and negotiation over conflict and confrontation, a positive sign for international relations. That's good news for businesses, who rely on stable trade relations to thrive and expand. It's also good news for markets and consumers, who are hoping for a return to stability and predictability in the global economy. Still, China's export review injects a degree of uncertainty into the equation, reminding us that the path forward may not be entirely smooth. It's a stark reminder of how dependent the world is on China's factories, and its role in the global supply chain. So, is this a genuine step toward lasting peace and cooperation between these two global powers? Or is it just a strategic pause, a temporary halt in the trade war while both sides reassess their positions? Only time will tell what the future holds for this complex and crucial relationship. To understand why this matters, let's rewind. The US-China trade war was a brutal cycle of tariffs and retaliation. American farmers lost their biggest market, manufacturers faced soaring costs, and Chinese factories saw orders dry up. Prices rose, jobs were threatened, and uncertainty ruled. The endless tit-for-tat hurt both sides and the global economy. This new framework is an attempt to end the chaos and restore predictability. It's not friendship, but it's a willingness to play by the same rules again. Fragile, yes, but better than open economic warfare. The world is watching to see if this truce holds. China isn't just exporting trinkets, the small, inexpensive items we often associate with global trade. It's the world's factory, particularly when it comes to electronics. From the simplest components to the most sophisticated gadgets, much of it originates in China, and it doesn't stop there. Clothes, heavy machinery, and a vast array of other goods also pour out of Chinese factories every single day. Look around you. Your phone, your laptop, and even that comfortable t-shirt you're wearing likely have Chinese origins bearing the ubiquitous Made in China label. So, when China reviews its export policies, it's not just a local affair, it's a global event with potentially far-reaching consequences. There are different ways to interpret this. The optimistic view suggests that China wants to improve the quality of its products, innovate, and move up the value chain, focusing on higher-end manufacturing. But there's also the strategic view, which sees it as a stark reminder of China's immense power and influence in global supply chains. By carefully reviewing its exports, China is essentially signaling to the world that it can tighten or loosen the tap of global commerce as needed, controlling the flow of goods. This gives them significant leverage in international negotiations, and proactively prepares them for any future trade tensions or disputes that may arise on the global stage. It's both a flex of economic muscle and a subtle warning to other nations. The reality is that the world is deeply dependent on Chinese exports, and therefore, any change in China's export policies has the potential to create significant ripple effects across the global economy. That's precisely why this review matters so much and why the world is watching closely. So what does all of this mean ultimately for you, the consumer? If tariffs drop, companies like Apple could potentially save billions of dollars, and they might even pass some of those savings on to you, the customer. But conversely, if China decides to restrict exports of key components, that scarcity will inevitably drive prices up across the board. So your next phone, car, or even a simple home appliance could end up costing you more than you expect, or even worse, be much harder to find in stores. These disruptions could very well lead to significant shortages, resulting in longer wait times for products and frustratingly empty shelves at your local stores. In response, companies would undoubtedly scramble to find new suppliers and alternative solutions, inevitably raising their costs and creating even more uncertainty in the market. The reality is that China isn't just a small cog in the global machine. It's a main gear that drives much of the world's manufacturing. Therefore, any policy change enacted there has the potential to shake the entire global system. For businesses, this translates to a time of increased risk and intensive contingency planning. And for consumers, it ultimately means potentially higher prices and a lot less certainty about product availability. Experts are cautiously optimistic, but also deeply anxious about the future. The situation is complex, and predicting the long-term effects is proving difficult, even for those who study these dynamics every day. Some see China's move as a genuine effort to stabilize trade relations on a global scale. They believe that China recognizes the interconnectedness of the world economy and boost its own economy, which has faced some headwinds in recent times. A stable trade environment is crucial for sustained growth. Others say it's a calculated play for leverage in the ongoing geopolitical chess game between the two nations. This perspective suggests that China is strategically showing the world just how much it relies on Chinese manufacturing and supply chains. The US will undoubtedly push for stronger protections for intellectual property and greater market access for American companies, seeking a more level playing field. While China keeps its options open, carefully weighing its strategic interests and maintaining flexibility in its approach to trade negotiations. Any hint of export restrictions or escalating trade tensions could quickly rattle global markets, sending shockwaves through the financial system, and ultimately threaten the fragile peace and stability that underpins international commerce and diplomatic relations. This could potentially be the start of a new, more mature and balanced phase in US-China relations, characterized by mutual respect and cooperation. Or it could simply be a temporary pause before the next, and perhaps even more intense round of conflict and competition. One thing is undeniably clear: the era of easy, frictionless globalization as we once knew it is definitively over. The complex and evolving US-China relationship will continue to shape the trajectory of the world economy for many years to come, influencing trade, investment, and innovation. So what do you think? Is this a sign of real progress and a genuine commitment to cooperation, or is it merely a strategic timeout, a temporary reprieve before the next major move in this high-stakes game? We're eager to hear your thoughts and perspectives on this critical issue, so please let us know what you think in the comments section below.